Good morning. Today is Tuesday, February the 21st, and the time right now in Singapore is 11:42 in the morning, and we are getting close to noon. But overnight, because of the market holidays in the States, United States was celebrating the President's Day yesterday, and therefore the markets were closed, and we can only go back to check out what happened just before the weekend on Friday. Of course, we have seen on Dow Jones itself, the market basically is still consolidating. However, there is a minor development here. Remember, the market has been consolidating between the low point of 33,581 to the high point of 34,334. The market has not been able to break out either way. But last Friday, we see a small minor breakout to the low side below 33,581. And I believe that was a exercise to search for stop just before the market holidays, and finding no follow-through selling, the market actually rebound back. For those who trade breakout, I think you would have already sold on the breakout of 33,581, and you would have been caught in a very unviable position because the market actually closed higher. And if this result in the market taking the market higher beyond 34,334, the market has a danger of taking out last December high at 34,712, and in either case the market may extend higher to 35,500 thereabout. And for those people who are short yesterday on Friday, you will look rather silly having sold at the bottom of this range here. So that is the danger. Okay. However, this week itself we have a couple of major numbers, but mostly these were pertaining to purchasing managers index starting this late afternoon in Europe. So we will have to take the market as it unfolds. Over the S&P 500, the risk of an extended rally is a lot higher than the Dow Jones, because I have mentioned many times the rebound from last October low of 3,491 to 4,195 appears to be incomplete. Symmetrically speaking, it doesn't look regular, and I think that is that risk for the market to extend higher beyond 4,325.28, which is last August high. Okay, so if this is the case, the risk of another rally remains very real, and because of the pullback from 4,195 remains corrective in a three-wave pattern, and ideally the market can come down to test the 4,025 level. That would be perfect. If the market come into this range of prices between 4,000 to 4,025, and we have a reversal signal in a lower time frame, take it, because I will. The market have a chance of actually breaking the February high of 4,195 to extend all the way to perhaps 4,370 to 4,530. So this remains a very real possibility here. Whereas in the Nasdaq, we have a bit of a different structure here. The low at 10,440 to the high of 12,881 appears to be symmetrically balanced, and it gives rise to my idea that the market may have already pick up. Okay, so from here the market pulls back. So far the low has not been has been very corrective in nature, and if this low can extend lower to 12,000, to test 12,000 without breaking it, I think the market may have another chance to retest the 12,881. Okay, so but this market is primed to resume its larger degree downtrend. So I am a little bit skeptical about the rally in the Nasdaq. I am more looking towards shorting the Nasdaq if the market shows signs of losing momentum as market rebound. Okay, so over in Asia, we see that in Asia, the Hang Seng market has been coming down in a very corrective manner after hitting a high of 22,700 that was traded on January 27. So for almost a month now, we have no new high in the Hang Seng. What we saw was market retracing most of its gain since the rise here in December. Okay, so we can see that the market still is poised to go higher, especially now the market has gone into this bracket of prices, which I consider to be an area where buying trades might actually re-emerge. This area is 20,340 to 20,800. The market has dipped into this bracket of prices, and all we need now is a confirmation. By going down to the lower time frame, all we want to see is some kind of a reversal. When I say reversal, I refers to something that looks like this. Okay, hang on. I am hoping to see a reversal signal in the same manner as what we are seeing here over here. This is what we call reversal signals, and these are quite powerful. For a time being, we don't see that as yet. Okay, so we will have to see how this market unfolds as the week unfolds itself. So based on this, if there's a buy signal, the top side here, there's a risk the market will take up 22,700 all the way to 24,800. So this remains a real possibility. But by and large, the Hang Seng is a market primed to resume its larger degree downtrend, very much in line with what we saw in the Nasdaq 100. Okay, and over in the Shanghai Composite, we have a rally today, and this is a third rally ever since the market hit the high of 3,310. There was one attempt last week on Thursday at 3,308. This morning we have another same attempt. Again, it was stuck at 3,308. Market could not go higher, but if it can, I think the market may have a chance to actually extend a little bit higher towards 3,375 to 3,470 thereabout. So we can see that this market is still primed to go up, because symmetrically speaking, the market does not look like it has topped out. Okay, we will give it a little bit of benefit of doubt for the upside. Over the Nikkei, we can find that Nikkei is still very much in consolidation. It doesn't have any lead to decide which way to go, and the market has been kept at the high here at 27,821, and that high was actually traded in the first week of February, on February the 6th. And if the market can actually come down a little bit to 27,200, there is a possibility the market may extend higher towards the 28,420 levels. Okay, so again, we will have to see what the market will do. Over in currency market, we can see that the dollar basically has retraced a little bit ever since it hit a high against the yen. The dollar versus the yen at 135.12 on Friday. Market pulls back a little bit, but by and large, you can see that this market has already hit its equality level, and it should just end here at 135.12. But I suspect that market may actually go higher, and if the market can actually rally all the way to 138.5, that means the market is no longer in consolidation. The consolidation probably have already bottomed out at 127.20 in the middle of January. So this is a new outlook for dollar, because the dollar is expecting market expectation has shifted somewhat, because the last 2 weeks we can see numbers coming in to show us that we have very sticky inflation numbers, and the Federal Reserve may be prompted to increase to reassert higher interest rates. Okay, so that one will remain to be seen. So of course, in the euro versus the dollar, if the dollar retraces, of course currency will rebound, and this is what it did. What it did last Friday. The low is 106.12, and the market has been rebounding, and looks like the market may actually rebound a little bit higher. The market now is in this bracket of prices, which put it very vulnerable for a rebound. This bracket is 106.60 to 106.70 thereabout. The market can actually hold here, which is currently in this bracket of prices. It may have a chance to challenge the 108 level. Okay, of course, whether or not it can do that, we will have to see. Okay, but we will have to take it as it unfolds. Over in the Aussie itself, we can see that the decline from 0.7160 is still very much in progress. I do not believe it's over. The low so far is 0.6812, and we have a bit of a rebound yesterday, and the market went up into this bracket of prices, which I consider to be vulnerable to selling interest, and it did. Market, this bracket of prices is 0.6920 to 0.69.5. Market went up to a high marginally into 0.6921, okay, which is exactly what I expected. Market seems to be easing off, and basically I've already gone short, and I'm added to my short position, and the market may actually progress towards the equality target of 0.6730. Okay, so this is remaining my immediate target. Over in sterling, we also see the same kind of phenomena. If the market can actually rebound a little bit more later in the afternoon session, when London and Frankfurt open, maybe the 121 will be a good level to reposition short position. I have no position currently in sterling, but it looks like based on the pullback from 124.5, it does look like it may actually go down to challenge of 118. Okay, 118 is, which is this level. 118.40 is my immediate target, but there is always a possibility market may go even lower. But for time being, if I'm really short at 121, I will most likely take profit at 118.50. Okay, in dollar CAD, the market does appear to have finished its correction. This is a three-wave equality level at 135.37, so that it does look complete. But I have the same feeling as what I have for dollar yen. I think the dollar is reasserting its longer term upswing. So if this is the case, the dollar CAD may extend higher to 136. Okay, so we will have to leave this open. It doesn't appear that this market may want to come back down anytime soon. Okay, over in let's say crude oil. Crude oil was a bit of a volatility last night. Okay, the market, of course, is very, very quiet. Market went up from a low of $75.32 on Friday and went up to as high. Let me see what's the high here. At $77.74. Basically, I've gone long. I've reinitiated two long position as the market bottoms out, and now I have this idea that the market may actually take out the $82.66 and may actually give me a three-wave equality move all the way to $83.69. So this is my immediate outlook for crude oil, which is the WTI crude oil. Over in gold market, the same thing is happening. I'm positioning to add more to my gold position. I have already gone long the gold market as a market rebound. Remember, I was telling you this guy has actually have a reversal pattern on the daily time frame, which is significant to me. You can see that this bar here, okay, which appeared last Friday, is a classical reversal signal to the upside. That gave me the confidence to call for a buy, at least in the near term. So if the market can actually pull back a little bit more, okay, to let's say $1,834 or $1,830, that will be my level to look for buying signal. If I get one, I will add on to my buy position for a minimum challenge of 1,870, maybe perhaps to as high as 1,890. But I think 1,870 looks like quite achievable. Okay, so from a risk reward ratio, this looks like a great trade setup because the risk I will control to below $1,816, and I take my chances for the market to rally to $1,870 basis the spot market. Over in silver, we can see silver rebound has been even more aggressive looking. So for the time being, if the market can actually extend a little bit higher, I would love to consider seeing if I can actually position a long position in silver. I have not had silver position for quite some time. Maybe I have to do some adjustment here. It's no longer this price. Maybe it will be at 60 cents, 63 cents. Okay, at 54 cents. Hang on, 54 cents to 63 cents. Okay, so if the market can actually pull back a little bit more within the day itself to $21.60 or $21.54 thereabout, then subsequently appear a reversal signal in the lower time frame, I would also consider it because like I said, the setup is very similar to gold. The risk is contained below $21.15. I will take my chance for the market to rally to $22.59 thereabout. Okay, over in crypto, we are still seeing elevated prices. For Bitcoin itself, the market has actually been trying to go up. Of course, the high traded so far is $25,252, which is 2 Fridays ago. Okay, sorry, sorry, on Friday. On Friday, 25,252, market went down to 23,344, rebound back to test the 25,252, failed, come back down again, and looks like it is primed to go up. However, before it goes up, I would love to see the market pull back one more time to ideally between the $22,800 to $23,300. If I can get a buy signal here, the market have a potential to go up or to extend higher to 26,300 thereabout. Okay, so there will be a better level, in my opinion, to position a short-term long position. Okay, Ethereum is the same thing. Ethereum has basically been consolidating after trading to a high last Friday to $1,743.30, pulled back to $1,631, and then it remains to be seen whether it will go up immediately to take out the $1,743 or it will pull back down ideally to $1,615, and that will set up for a long position towards an extended run to $1,813 or $12. Okay, that will be my short-term play for Ethereum. And when we look at Cardano is definitely very, very bullish. The market also hit a high last Thursday at 0.421, pull back to 0.385, bounce back to test the higher end, fail, come back down again. I hope it can continue to edge lower, ideally to 0.383 thereabout, to give me a buy signal such as this. For example, this is a very bullish development, but if it happens within this bracket of prices, it's even more powerful. I will definitely take it, at least for a chance for the market to take out the high of last week was 0.454 in Cardano. Okay, so over in Solana, which is the last currency, the last token I want to share with you, this market appears to be very, very bullish. This market has very little and very, very shallow consolidation, and anytime now the market may actually, without any further consolidation, may actually raise higher, take out the most recent high here at $27.12 and raise towards $38.50 thereabout. So among all the tokens, I think this is by far the most bullish looking. So if I get a chance here, which I don't think I will be able to get a very good price, but if I do, then I think this will be the first choice if I want to do any trading. Okay, so there you have it for a time being. This is all I have for you for today. I will come back to you again on tomorrow to share with you tonight's US market condition. Bye-bye.